Gold just dropped $382 in a single session. 5,072 to 4,690 overnight. And every headline you are reading right now is calling it a crash, a panic, the end of the gold trade. So here's the number that changes everything. The VWAP deviation. Right now, it is 0. And that single number tells you this is not what the headlines say it is. So if you understand why, you're going to see a setup tonight that most people are completely missing. A real panic in gold looks like minus 5% VWAP deviation, minus 8%, like the 2020 COVID crash hit, minus 12%. And this session, it's right at 0 now. So that means that gold is trading exactly at the institutional cost basis. Institutions aren't panicking out of gold. They are selling at fair value, at cost basis, into liquidity. So there's a name for that. It's called distribution. And distribution is what happens when capital is rotating, not fleeing. So the question is, where is it rotating to? USOIL is sitting at COILED 90%. In my V13 engine, the score is +3. That's maximum bull. This is the setup. Stay with me, because to understand why this matters, you need to understand something called the Cantillon Effect. Richard Cantillon was an economist in the 19th centuries who figured out something that still governs how capital moves today. When new money enters the system, whether it's rate cut, QE stimulus, it doesn't hit everything at the same time. It flows. First, it reaches the assets closest to the money printer. Then it ripples outward. The asset that receives it first benefits the most. By the time it reaches the average person, the price have already moved. That flow has a sequence. And that sequence is what the Cantillon flow framework is built to track in real time. So there are 3 layers. Layer 1 is liquidity, bonds and metals, gold, silver, treasuries. This is where institutional money parks first when the risk is off. It's also the first layer that absorbs the early stage monetary flows. Layer 2 is equities, the broad market, the S&P 500, Nasdaq, the MAX 7. Capital moves here once confidence is established in the layer 1. And layer 3 is risk assets, crypto, commodity currencies, high beta plays. Full confidence, full flow. In a healthy bull market, the sequence flows top to bottom. Layer 1 activates, capital builds, layer 2 follows, then layer 3. And right now, March the 20th, all 3 layers are off. Gold is -3, TLT is bearish. The safe haven bid just distributed. The S&P 500, Nasdaq is -3, every MAX 7 name at maximum bear score. The layer 3, BTC downgraded to +1 after the coil decompressed. And the composite score is -4 out of 9 and the regime is speculative. That is the environment. 3 layers off, no clean sequence, capital in transition. This is the backdrop for everything else in this video. But here's what's interesting. Something is getting a bid right now, and it's not in any of those 3 layers. Look at this chart. USOIL is right now at 94.43. We have a V score at +3. It's the maximum bull. We have a VWAP deviation of +10%, and the volume compression state is coiled 90%. So let me explain what coiled 90% means. Volume compression measures how much energy is stored in the price structure. Think of it like a spring. When price is trending hard in one direction, the spring is fully extended. That's expanded. When price starts to consolidate and volatility compresses, the spring starts to coil. That's building. When it reaches near maximum compression, it hits coiled. 90% means the spring is loaded to 90% of its capacity. Coiled readings of this level on a 3+ instrument, maximum bullish score, have a directional lean. When the compression releases, it follows the bias. And the bias here is bull. Now compare that to gold. Both are inflation hedges. Both are commodity assets. Both respond to the dollar. But they're diverging right now, and the divergence is the story of post-FOMC Friday. Gold ran from 3,500 to over 5,000 on one thesis: Fed cuts rates, dollar weakens, gold goes up. On Wednesday, the Fed confirmed one cut for all of 2026, not two. One. The rate cut thesis got cut in half. So some of that monetary premium came out of gold. Distribution, orderly, institutional. Oil was never priced for the rate cuts. Oil is priced on supply and demand. The Strait of Hormuz disruption is real. Supply is constrained. The Fed cannot fix that with a rate cut. And here's the macro framing. We may be entering a stagflationary environment. Slowing growth, that's what the -3 on equities tells you. Rising commodity prices, that's what COILED 90% on oil tells you. Gold has partially priced that in and is now correcting the monetary premium. Oil hasn't fully priced it in yet. The rotation from gold to oil is what the Cantillon framework is flagging as the highest conviction setup right now. So here are the key levels. COILED 90%, the entry zone 93.4. The target on coil release will be 96 to 100, and the invalidation would be daily close below 90. The oil setup doesn't work in isolation. There's a second piece, and that is the dollar. For the first 10 weeks of 2026, the US dollar index was one of the strongest reading in the framework. It had a +3, the dollar was dominant. And dollar dominance is a headwind for commodities. It suppresses prices in dollar terms. That's been a cap on oil, even as the geopolitical bid has stayed in place. But post FOMC Friday, that changed. DXY got downgraded from 3+ to +1, and price broke below 100. That 100 level isn't just a round number, it's a structural reference point in dollar-denominated commodity markets. When the DXY breaks below 100, the dollar headwind for commodities reduces. Commodity prices in dollar terms becomes cheaper for global buyers. That's a tailwind for oil. And look at what happened to the Australian dollar. This is the purest commodity proxy in the FX market. Australia export iron, ore, coal, copper. When commodities are bid, the Aussie goes up. When the dollar is weak, the Aussie goes up. The Aussie is upgraded from +1 to +3 in this session. Maximum bullish score on the commodity carry trade. Meanwhile, we have the British pound upgraded from -2 to +1 in the same session, and the euro dollar improved from -2 to 0. A quick word on Bitcoin, because it tells us something important about how the market is categorizing assets right now. Bitcoin has a split personality. Some of the market treats it as digital gold, a monetary hedge, a store of value, a hard asset with fixed supply. Some of the market treats it as a risk asset, high beta, correlated to Nasdaq, moving with tech. The question of which personality dominates in any given regime is one of the most important reads in crypto. So here's where we are today. BTC building 98% coil that I flagged on March 13 has now decompressed. BTC downgraded from +3 to +1 overnight, and price came from the 74 around 2 high back to 70.5. The VWAP deviation dropped from 7.5 to now 2.3. That's the coil energy converting into price movement. Now, what's telling? Every equity is -3 right now. Nasdaq is maximum bear. Every Mag 7 name is maximum bear. If BTC were behaving as a pure risk asset, it would be -3 alongside them. It is not. It's +1 and it's holding above AVAP, decoupled from tech. That decoupling is the digital gold personality showing up. In a speculative regime where equities are distributing, BTC is holding its monetary premium. But the key level is 70,130. That's the AVAP floor. If it holds above and the +1 intact, digital gold personality is dominant. If it closes below with expanded volume compression, it means a structural breakdown that risk assets personality will take over. So what's that level? So let me give you 3 things to watch going into the next week. Number 1, US COILED 90% carries into Monday. COILED readings don't reset over the weekend. The springs stay loaded. Monday's open is the next potential trigger. So let me give you 3 things to watch going into today's trading and going into next week. Number 1 is oil. Oil is currently almost 12% above the AUDUSD. It is coiled at 90%. You see here we have a compression area and we have the previous day low at 91. We want to see that hold if we are long oil. If it breaks below, we will see the next test will probably be at the 85, 86 area, which is the AUDUSD on the 4 hour. And if that breaks, we will probably also visit the previous week low, which is around 77 area. On the upside, we have the previous day high, which is around the 100 to the 102. And then all the way up, we have the 120 on the spike of the 8th of March. If we look at gold, gold is right now looking to struggle to regain AUDUSD, which is a big tell that we are not going to see that right now. Right now it is when I'm recording this is also losing the IVT zone. So a line in the sand will be the previous day low from yesterday where it touched the 4,500 area. On the upside, we have the previous day high, which was all the way up at 4,865. And then we have as well the golden pocket at around 5,000. So those are the levels to watch when it comes to gold. If we look at Bitcoin, Bitcoin is still 1.2% above AUDUSD. This is a very important area. It is still holding. And if it holds this level, the crypto decoupling story is intact. If it breaks this area on expanding volume, BTC reverts to full risk asset behavior in a -3 equity regime. So that's a totally different setup. And then we will have to rethink our trading plans. But we'll take that if it comes that far. Right now, the AUDUSD is holding, so that is still a positive and it is still a trade that is valid. So that is the Cantillon framework read for March the 20th. The regime is still speculative. We have a composite of -4 out of 9. It's not good. It doesn't look good. It is only for speculative trades right now. All 3 Cantillon flow layers are off. But the USOIL is loading the highest conviction setup on the board and the dollar seems to be breaking down. So the rotation is live. And if the dollar keeps breaking down, that would also be good for our dollar trade. The Cantillon effect runs on sequence and timing. Right now, the sequence is telling you something very specific. Commodities before equities in a stagflationary transition. The US oil is before gold and the dollar weakening is the catalyst. If you want the full dashboard and the terminal with the AUDUSD levels, the confidence score, the complete IVT framework, the link is in the description. And today I even released a daily brief that is free for you all to read. And the link is also in the description. I am writing these every day before the US Open. If this framework was useful to you, subscribe and turn on the notifications. The framework only works if you see the setup before the trigger. And that's why I write the daily brief every morning. Drop your questions in the comments. I read all of them. Regime first, volume seconds and price last. Trade safe. And bye-bye.